Since July 18th, cybersecurity stock SentinelOne has climbed 13%, but those gains have little to do with business results. Instead, SentinelOne stock has soared after rival CrowdStrike caused a global outage that disrupted millions of people. The question is whether SentinelOne can hold on to those gains. At the latest price, S1 has a market cap of $7.9 billion. With $200 million of cash and $900 million of investments, the enterprise value is $6.8 billion. Revenue over the last 12 months comes to $674 million, but the company is not yet profitable. Net income is minus $300 million with zero free cash flow and $220 million of stock-based compensation. But SentinelOne is delivering excellent growth. Sales more than doubled in 2021, 2022 and 2023. According to Bank of America, SentinelOne and CrowdStrike are the only two high-end players in endpoint security. CrowdStrike is clearly larger and more popular among big enterprise with nearly 5 times the amount of recurring revenue. But SentinelOne is growing faster. Fiscal 2024 revenue rose 47% at SentinelOne compared to 36% for CrowdStrike. And SentinelOne is also cheaper, trading at 10 times revenue compared to CrowdStrike's 18 times. Meanwhile, SentinelOne is moving closer to profitability. Free cash flow margin in the latest quarter was a respectable 18%. CrowdStrike's was about 35%. I said in my video on CrowdStrike that large businesses may want to diversify away from the company in response to the outage, and SentinelOne would be an obvious choice. The software is highly rated and more big clients are coming on board. Management clearly thinks it's got a good chance of taking market share. In an interview with CRN, CEO Tomer Weingarten criticized CrowdStrike, saying the outage was a product of bad design and bad architecture, not just an honest mistake. Another data point worth considering is Alphabet's recent takeover bid for Wiz, which valued the company at more than 60 times 2023 revenue. Wiz at one point wanted to buy SentinelOne, so perhaps SentinelOne isn't as expensive as it looks on paper. Despite the positives, SentinelOne shares have performed very poorly since its IPO. Investors have grown suspicious of unprofitable growth stocks. High stock-based compensation is another hurdle to overcome. But if SentinelOne takes market share from CrowdStrike and continues to put up strong free cash flow, investors are going to start warming up to the stock. But these are my personal opinions, not financial advice, and I hold no position in SentinelOne. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.